Okay, hello everyone, welcome back. My name is Greg Furman, and this is the Vantage Point AI Market Outlook for the week of July the 28th, 2025. Now, to get started this week, we'll begin where we always do with that very important dollar index. Now, what I will point out here is that in each one of the calendar quarters this year in 2025, the dollar index itself and the UUP dollar bull fund is held below its quarterly opening price. Now, price appears to be shifting at this particular time as we're now holding above that calendar quarterly opening. Now, what I've pointed out in the last few outlooks that it is the fiscal fourth quarter for the US, and in most cases there's demand for US dollars. So looking at the indicators in VP, the dollar is starting to turn bullish again. Now, there's a lot of factors that could send the dollar lower. The trade tariffs, Trump's war with Powell. We also have the event risk this week of the Federal Reserve interest rate announcement. Watch what you really want to watch with that is the press conference to see what Powell's plan is going forward. But for now, as you can see, we are holding above the quarterly opening price, that price coming in at 26.83, and the indicators in VP are starting to turn bullish. Now, I would strongly recommend to wait until Monday's close to see what happens, what media announcements we get on Monday, because I can almost guarantee you there's going to be something. Trump this weekend, I believe, is in the UK trying to cut a deal with the EU. So we'll be watching things very closely. But again, 26.83, that is a key level. Now, when we do that comparative to gold, we can see that gold also is holding above its quarterly opening price, but it's not carrying the same bullish tone as the US dollar. We have the MA diff cross that has taken place right here that's warning that at the very minimum, we are likely to come down and test that quarterly opening at 33.03. In my respectful opinion only, I think that it will likely break if we can get the dollar strength. But either way, we are likely to see dollar strength in mid-August into the end of September. So gold longs could be difficult here. The indicators are definitely suggesting there's a bearish tone. We've got very stiff resistance up here now, 34.49. So we know where our resistance is, and we know exactly where our main support is at the quarterly opening at 33.03. So again, watch for a break of that particular area. Now, the SPYs have done very well. Again, they're starting off the quarter bullish yet again with the dollar. We've had one major retracement on July the 16th, directly on the T-cross long and the quarterly opening price. At that time, 616.36. That is our key support level. The indicators in VP are a little bit mixed. We are, I would argue, a little bit overextended, but I could also say we're overextended months, if not years ago, and it still continues to climb higher. So I think if we get a round of dollar strength coming, that could push the equities down, but longs remain in play while above, again, that key level, 616.36. Now, Bitcoin, again, having a pretty strong quarter here, but we're losing momentum, guys. The medium and long-term predicted difference are pointing down, but here's a very interesting way to look at the predicted RSI. I'm looking for a break of the 40 level to get shorts moving here. I believe we will retest 107.598 before Bitcoin makes its final run up for the calendar year. I am expecting a down year next year. Nothing is for sure, but we are in a 3-year cycle with Bitcoin. 3 years up, 1 year down. We're in the 3rd year of this particular cycle. So watch, be very cautious, but I think longs very, very risky up here looking at those VP indicators. But again, we don't have momentum to the downside at the current time. But I think a retracement down into this 107.598 area is more than reasonable at this time. Now, looking at U.S. oil, right now, oil is running pretty much flatline. We've had a couple of retracements again. Keeping our trading, investing simple here, guys, without complicating things. We're in the 3rd quarter. What is this doing? Is it above it, the quarterly opening, or below it? That's the first question you want to ask yourself. And what is the primary trend? Primary trend, we're below the yearly opening price at 76.84, but right now the market is trapped between the calendar yearly opening price and the third quarter opening price. So we're looking for a break on either side of this. Here's an alternative way to invest or trade in this, guys. You put a buy stop order above 76.84 and a sell stop below 73.61. That is probably the best way to play this, and wait for this break to occur. But in my respectful opinion only, these indicators are suggesting that that break is going to be lower, not higher. So keep that in mind, but be mindful of those particular areas. Now, when I look at the German DAX going into the next week's trading, same deal here, guys, okay? The quarterly opening price is key to hold above. If the DAX is going to remain going higher, we need to hold above 44.56. The T-cross long, 45.12. Identifying support here is very simplistic. So again, the same thing. If you believe the DAX is done, then you put a sell stop order just below the quarterly opening at 44.56. If it triggers and breaks, then we have a pretty decent retracement area down into the 33.29 area. So again, I think the Fed this week will have something to do with that, and watch your Euro-US Forex pair also to see what it does. The DAX and the Euro have had a pretty strong positive correlation as of late. So if the Euro tanks, it's reasonable to suggest it could pull the DAX down with it. That is the key thing you want to make sure you're keeping your eyes on. And of course, we want to look at the VIX. What is the volatility? Well, we're breaking down below the calendar yearly opening price. And again, the quarterly opening is now is positioned correctly, 47.25. Our main resistance area on the VIX, the VIXY, excuse me. And we've got our T-cross long, 44.35. So we know exactly where our resistance is, but what's interesting, guys, is that the T-cross long is now intersecting with the calendar yearly opening price, which indirectly suggests there could be a bigger equity rally coming. But my optimism on that still remains heavily guarded, given the current conditions with the trade war, the tariffs, Powell versus Trump. There's a lot of things that could send stocks lower very quickly. But for now, that's how the VIX looks. It is turning bearish, and it is bearish to start the third quarter. Now, when we look at some of our main Forex pairs this week, all of the G7 Forex pairs are related to the dollar index or the UUP. So again, when we look at the Euro-US pair, it is struggling. The dollar index is above its quarterly opening price. The euro is below its. So what we need, if the euro is going to remain bullish, we have to break through 117.87. That is contained the euro the entire month of July here, guys. And always remember, next week we're going to get a new monthly opening price, which is likely not going to match the quarterly. So if the euro does move lower and we open up the month of August with a new monthly opening price below the quarterly opening, that basically confirms that September is going to be a good month for the dollar. So keep that in mind, okay? And of course, these other pairs will all follow suit. You've got US Swiss franc here. It's clinging to the quarterly opening price here. We are below the T-cross long, but this is a very important time here. Which way is this going to go? So with the US Swiss franc, 79.30. If there's a long here, we need to hold above that particular area, and the indicators in VP are suggesting that this pair is in trouble. So what I have seen is the dollar index can still move higher, but this pair could go lower if it's a risk-off environment. The same thing would apply with the dollar yen. If those equity markets remain firm, the dollar yen can extend higher. I believe this is probably the final push in the next few months to the upside on the dollar yen, and then it goes lower into the year end and then lower next year. But we are bearish on the year, 157.28, but on the quarter, the dollar is doing pretty decent against the yen. And always remember, this is a carry trade. So the position of the predicted RSI, the neural index strength, saying there is some upside potentially here. And again, if you're going long, make sure your stops are below 144.04 or wherever. And again, you can always lower your position size and scale in. I do believe the dollar yen will extend higher into at least the end of September. But a lot of that now is going to be decided by Jay Powell and the Fed, and be a very interesting meeting this coming Wednesday. Now, with the pound dollar, I'll circle back to that. We had a good move up this past week, but you can see that if we look at the pound dollar versus euro US, the pound dollar is clearly the weaker pair. We're well below the quarterly opening price here, that number coming in at 137.33. And it's not looking good going forward into next week. We've got we're holding and closing below the T-cross long, 135.15, but momentum is building on that predicted RSI. 35.5. Most people will use an RSI in a conventional way, overbought, oversold, but it can be a very effective tool when it's used to gauge momentum. Always remember that, guys. It's very, very important. So watch out for Monday trading, and if the pound dollar is still below the T-cross long at the end of day on Monday, chances are it's gearing up for another sell-off. Now, when I look at the US-Canadian pair, giving back all of the weekly gains, and as you can see, where it's failing is just below the calendar quarterly opening. So again, we're in the third quarter, but we're in the US fiscal fourth quarter. The US dollar has a clear advantage against the Canadian dollar. Now there may be some type of reprieve and they could start buying Canadian dollars if they get a trade deal, but Trump is signaling he's not really interested in a trade deal with Canada. So we'll see how it plays out, but August 1st is the deadline. So again, the Canadian dollar could benefit from that, but these tools here are suggesting we basically have a bottom here. Going back to June, we have another one on the 7th. You can see how it usually rallies in that first week of the new month, and then it pulls back again, but it's all around that quarterly opening price. So US Canada has largely been above this price, this quarterly opening at 136.08. Keep an eye on it, guys, but that is the line in the sand. And not only that, if there is any further downside, I need a break below these lows down around 135.40. I got 135.57, and over here I've got 135.76. So each one of these, there's a higher low. Now, that doesn't always necessarily mean it's going to go higher, but certainly the tools in Vantage Point are suggesting that that is very, very likely. Aussie and the Kiwi, they're still going to be at the mercy of that China trade deal. We'll see how this one plays out, but my optimism, again, I just can't get any momentum on these pairs against the US dollar. And in most analysis, they throw in 50 different indicators, candlesticks patterns, Fibonacci. It's a never-ending list of tools, when the simplicity of measuring it and saying, okay, what kind of quarter is the Aussie having? It's not good. It's been failing up in this area repeatedly, and it did again this week. We had a good momentum push, and then we closed below the quarterly opening again. So the T-cross long, that's coming in at 65.40. If that breaks down, then the Aussie is likely going to take a run lower to at least the most recent verified support low, which is coming in at 64.55. And usually, again, that dollar strength starts in mid-August and it goes through into the month of the entire month of September, and sometimes even into early October. The Kiwi obviously will follow the Aussie, but there'll be a slight variance between these two, ever so slightly, and that's usually determined by the Aussie-New Zealand cross pair. So right now you can see that we have we can differentiate between which currency is weaker, the Aussie or the Kiwi. Clearly, based on that quarterly opening price, it's the Kiwi is weaker than the Aussie. So again, if we're looking at shorts on one of these two pairs, I would have to say that the Aussie has a slight advantage. because of that. Because if we look at the proximity to that quarterly opening, it has plenty of room to run here, where the Kiwi last week, it took the brunt of the hit. So that could be also tell us that there may be a short pending on pairs like Aussie, New Zealand. So a lot to think about next week. Volatility will be high. There's multiple trade announcements with the EU, Japan, Canada. So there will be no, plus we have the Fed on Wednesday. So there will be no shortage of volatility. But with that, it always brings opportunity. So with that said, this is the Vantage Point AI Market Outlook for the week of July the 28th, 2025.